Hey guys, Mike here. So I hope everybody's doing well today. And in this video, I wanted to cover something I had done before the stock market fell off a cliff back there in like February, March area. And actually, it was right before he held up the sign saying, "Here's the tariffs." The market just plunged. And so I was, doing a video for the members. I'm going to show that to you about finding levels, right? Especially like the Mag 8 and some other stocks. And I was going to use what I did was I used a different way to do it this time than I've ever done it before. And I wanted to see how it worked out. And so I wanted to, show it to you because I'm going to show you exactly like how the video played, and then I'm going to come back and show you how it worked out, what mistakes I made, what corrections I can definitely do. And then there was one I just couldn't foresee it. So, there's nothing I can do about that. But it shows you what happens in every market crash and how it's different and how stocks act differently. So watch this really quick right here. Then I'm going to come back and show you how this actually played out. And then you can give me input on, what are you using to actually find these different levels that you like to DCA into.
Now, I went through yesterday just on the Mag 8. I did it with more stocks, just marking out levels, right? And just sitting there saying, look, I don't know if we're going into a crash this year. Could be. But having levels on whatever charts you own and researching why you have those levels, so when you do go in a crash, you won't hesitate to buy at those levels. And a few rules I followed was, one, marking them out, like making sure they're spread far enough apart where it really helps the dollar cost average effect, right? Instead of buying every $2 that goes down, you're spreading it out between 10, 20, 30, 40 bucks. And it helps. And also having levels that are realistic, and then some that's like, boy, that's just a Hail Mary, but it could happen. Now, the way I mark mine out on these right here is I just know from studying these charts that all charts seek out liquidity, right? And so I'm looking for big fair value gaps, like weekly, 2 weeks, monthly especially is awesome. That also line up with being in a discount. If they line up with being in like what used to be support or something resistance, that's even better. And then I also went back before even putting them in there and said, okay, well, what is the norm in a crash for each stock? Because each stock's different. Some hold up way better than others. Like when you see Abgo, it holds up way better in crashes than you might think compared to a lot of these others. Like Tesla doesn't hold up well at all. And so as we've seen Tesla go down, so some of these levels, and I put numbers in there, are marked out, but they're marked out obviously with some being realistic and some being a Hail Mary maybe, but it's that one level at the very bottom where you go, boy, if that happens, man, I got to go sell some blood at the blood bank or something, or do something, start selling furniture to raise more money to put into that level, okay? And again, like NVDA, for example, I think everybody, you look at this, that's going to be a draw on liquidity right there between 90 and 100 if we decide to go into crash, but still really high, right? But down here, you got, I think this is actually a monthly fair value gap when you add those together. But anywhere from, I think it's 45 to 60, I believe it is. That's just a load the boat dream type deal right there. Okay, because it's still NVIDIA. That's just the way it is, no matter what's happening here. And I also like to bring up the 200 weekly on all these, just because usually in a crash, most stocks are going to go below the 200 weekly. You see a lot of them below it right now. But this one, because it ran up so much, it hadn't even touched the 200 weekly in so long, it's not even funny. But again, that 200 weekly is sitting right down there. Meta, this one right here, obviously 361, 400, easy spot. But when you look down, plus all these will be in a discount, right? Now, to get down to other levels, I would need Mark Zuckerberg to start talking about the Metaverse again, because that's what got it down in the last one. So I doubt this would ever happen in a million years. But if it did, like we got in a real serious crash and everybody just started panicking out and selling everything, you started talking about the Metaverse or something, that's when you can see this thing go sub 200, which would be crazy, right? I mean, absolutely insane. But when things crash, things crash. I never put it out and always have that in there and a reason why, right? Because that will be a draw on liquidity if things did get bad at some point in time. Microsoft, this usually holds up pretty good during the crash compared to a lot of them, right? It's not a Tesla when it crashes, you can see right there. Just not at all. And so, that was a 2008 one. That was one of the worst ones ever. And Microsoft wasn't even Microsoft at that point in time. There's 2018, there's 2020. And so, again, compare what they've done in the past and just kind of look at it and go, okay, cool, and draw your fibs down. I like to draw mine from like the high of now down to obviously the previous crash. So if we go to a new all-time high on all these stocks and start setting it up, I have to readjust the fibs and stuff. But again, you look at these percentages, that's norm for Microsoft and crash right there. Now, anything below that is even better. Okay, Apple's another one, usually holds up really well during crashes. And again, these are just levels. Say, okay, cool, mark them out. On here, it's either going to be a monthly fair value gap, which you can see right there, 2 week fair value gap, along with where the 200 weekly is. That right there is a dream scenario to get, if you can get Apple, good Lord, sub 140. I mean, that would be an amazing thing to see right there for sure. Because again, it is Apple and they buy more stock back than anybody else. And that would be a 50% haircut off the top. But you got to put those pipe dream levels in, guys. I mean, that way if it hits, you've already done your homework. You go, oh, wait a minute, we just did what? Set your alerts. And, 2 years now, 5 years, whatever it is, you look back and go, wow, that was unbelievable. Okay, I mean, think about when Meta dropped as much as it did in 2022. I guarantee you, people had those dream levels on there, they were buying. And so Google's another one. I mean, much realistic one in the middle, this one right here. To see it around $100 again, I mean, it's going to have to be a big, big crash, a big pullback on these because they've already sold off so much as is. And then Amazon's another one. I mean, the levels you see these way down. They're spaced way out because you want to be able to put a dent in what your average is as this goes down because you'll never spot the bottom. You're never going to spot the top, never going to spot the bottom. You hope to spot the middle somewhere and kind of just ride it all the way down the bottom. And then when everything turns and starts ripping everybody's face off, all of a sudden you're in the green before you even know it. And again, can we get down to 100 on Amazon? Sure. I mean, it could happen. Again, never say never when it comes to this kind of market, especially all the leverage in the market. I'm just marking these out because I know these will be a draw on liquidity just by studying the charts and stuff for sure. Don't mean at the bottom, but I know they're going to be the draw on liquidity. And I could also see a bounce from there as well. So again, another thing I would say, and I can't re-emphasize this enough, if any of the top 10 stocks in the S&P get oversold on the weekly, dude, you need to go sell your car. Seriously, I'm just joking. But I mean, you do, because when you look, you pull any of them up. Matter of fact, pull your stocks up. They're not the Mag 7, Mag 8. See how often they get oversold in the weekly or the monthly. Okay, because when crashes start and happen, that's when you're going to see it. But on the top 10, it just rarely happens. It rarely happens. And so, the return on it is just unbelievable. The risk reward is crazy. Is it going to be the bottom? Probably not. But man, when it happens, oh my goodness. Because it is just a gift. It's something you're just not going to get to see very often. And look at your own stocks, right? I mean, if you're an owner of a lot of these other stocks, maybe they get oversold a lot, maybe they don't. But study what they've done in the past, right? And that way you'll know. You'll know when it's safe to go in there. I mean, look at Meta, right? Meta did that crap. He was talking about the Metaverse. Before that, you didn't see it very often. And the returns are very fast. It's just huge, right? It just doesn't happen a lot. And so, again, I cannot emphasize that enough. One of the stocks I was really surprised to see that holds up so well is Avgo, is Broadcom. And it's kind of surprised me. And I mark these levels out and stuff. I know there'll be draws in a crash. But, you would think this one would go down like a lot more than a lot of these other big ones. But not really. I look back at, the last couple crashes and stuff, and it just doesn't go down very often, and it doesn't get oversold on its weekly chart either very often. And so it's another one of those. If it gets oversold, it's like, wow, okay, cool. And it is one of those companies that's needed. This is going to be the AI. I mean, look at that, one time, going back to the 08 crash. Isn't that crazy? I mean, 2010, I'm sorry, it came public. So one time since it's been in existence, it's been oversold on the weekly chart. And that was 2020. So good reason for that. And you go back to 2022 and compare to how much that one went down compared to a lot of others. I mean, it's pretty dang surprising.
And so now when we go back to actually look at what happened, you can see Microsoft, sure, hit this first level. Again, major discount, came into this major fair value gap right there, or imbalance, whatever you like to use. Plus, this one actually got oversold. Remember, I told you got to buy these Mag 8 stocks, if you include Avgo, because they're going to bounce. I mean, it is what it is, and it may not be the final bounce, but it's going to be a bounce in a good dollar cost average spot. You can see that thing just took off like a bat out of what. Apple came down actually below this first area in this golden pocket. This is one I would change this up. I should have pulled this down into that area, but I saw that trend line. I felt good about what it was doing with it. So this is one I would definitely go back and be a lot more critical about for sure. Remember, a lot of these levels below, that was recessionary type stuff. So if we do go in recession either at the end of the year, maybe next year, year after, that's when those levels are going to come into play. And you got to have them on your chart. You got to be ready to go with it and have a reason behind it. But Apple's been lagging too, which was crazy. But, people think it can't get down there. Trust me, Apple can get down there. I mean, all of them can. Okay, just keep that in mind. Again, this was a monthly fair value gap down here, which is why I got it on there. It will be a draw on liquidity coming into actually an area of support right up there. I need to pull that line a little bit higher, but that's what it is. The other one way down below, I mean, yeah, that would be really, really nice. Don't get me wrong. Then we pull up Google, you know, that one actually came down, that first box, good discount, you know, in the supportive area, into what was actually end up being a fair value gap. Meta right here, again, missed this one. And this is one of the ones I look back at it, should have drawn the fib differently, and I should have known because Meta is one of the strongest performers over the last few years. I should have put it higher for sure. There's no doubt about it. I'm still gonna keep the other boxes there, but that's one I definitely have to reevaluate. Amazon missed it by like, I don't know, $4 or something. The reason why I had these so low is because I got a low cost average on Amazon, and I was like, yeah. I mean, a lot of stuff's coming from China at that point in time, especially. It was gonna get hammered, and it did get hammered. But boy, just missed that one. So it is what it is. Those boxes will stay in place for sure. There's no doubt about that. I'll probably go back and do some critiques on that one for sure, but not as much as I would on Meta and like Netflix, for example, which I didn't put in here, but that was a whole different one. I didn't realize Netflix is going to be a defensive stock, and people start talking about it as a defensive play because nobody's canceling the subscription, all that fun stuff. I didn't even show it. I forgot to show that one, but yeah, that was a whole different one. But I would definitely keep these boxes in place. Again, a lot of people who hadn't been through recessions will say, oh, you'll never reach these levels. Oh, we hit a real recession? Trust me, we may break those levels. Okay, so just kind of keep that in mind. That's why I'm doing this. Havgo, of course, which is one of the better performers, holds up. Should have hit my own advice. Missed this one barely. I mean, it's like $5 or something. It didn't hit that box right there. So big regret on that one. NVDA did hit. So there you go. Boom. Nice recovery on that one right there. So that one made sense. Again, that big box. Boy, wouldn't that be nice? Holy moly, that would be awesome. Again, that's recessionary type prices. Tesla came down in this one, of course, we know, did not hit the box down below. Again, it had a huge rally since. So again, these are recessionary type, especially that bottom one. That is definitely a recessionary type box right there. And depending on, you know, again, where this thing falls from, right? These things may go crazy, right? Hood was another one, got the first box. Nice bounce from there. Again, these are recession type stuff right here if we ever hit that. For sure. Another one was good utility stock, probably the leader, GEV. Hit that first box to the penny, golden pocket area right there. So that was textbook. Now it's at all-time highs. Next level is another monthly fair value gap. So if it comes down there, we can see that. I don't know. Again, utilities hold up better in recessions because a lot of people rotate into them. I don't know if I ever see that come back down to that again, but we'll find out. And so, you know, but that's where we're at on that one. And so again, I would go back and change a few things, make some tweaks and stuff, really look at more of the stocks. Like if we did go into a recession like GEV, utilities do hold up better because people rotate into them, that kind of stuff. But I'd have to see, and I'll definitely still keep that box in place just in case. But again, I want to separate them out to where I'm getting a nice DCA in, right? Big lump here, and then if it comes down nicely, another 10%, whatever it is, 15%, DCA in again, that kind of stuff. So, you know, that's what I will be looking for and stuff. So we'll see, because if Jim Carzon is right and boom, the market does go down 45%, a lot of those boxes, and even I have to add some at the bottom, would absolutely hit. But again, people have been calling for a recession for like, I don't know, 5 years now or something, and not even come close. So we'll see how it goes. But let me know, you know, what you think in the comments. Anything I could probably add in to use in there, making changes. I don't mind, so I put it out there to you and stuff. So anyway, please hit that like, subscribe button on your way out. Think about signing up for membership, less than $1 combo. That's everything you get with it. And I'll see you guys tomorrow.